This is our third hearing that we have done on FHA. And the reason that we've had as many hearings as we have is FHA is an important component of the housing and the finance markets in this country. And they've become a larger and larger portion of the business, and controlling over 50%, for example, of the mortgage insurance premium in this country. And this is no small insurance company. This insurance company has over $1 trillion worth of business on the books. Now, what does that mean? Well, that means that because it is a government-backed entity, that the taxpayers are, in fact, on the hook for over $1 trillion worth of mortgages in this country. But the other aspect of it is that it is disturbing to find that this entity, and what we've learned in previous hearings, is that this entity is somewhat in financial straits. It is an entity that is basically has a negative net worth. And so you have an over $1 trillion entity that's backed by the American taxpayers that has a negative net worth. Any other company like that would be in bankruptcy or receivership. And so I think it's important that this may be the most important hearing that we've had so far, because today what we're going to analyze is if FHA is in fact an insurance company, which they are, then are they operating like traditional mortgage or traditional insurance companies? And we're going to hear from witnesses today that will tell us a little bit about what the profile of an entity like this should look like if it were in the private sector. And why is it important that we compare them then to the private sector? Well, it's important that we compare them to the private sector is because they are competing with the private sector. That's one reason. But the other reason for them to be run in a financially sound way is the fact that the taxpayers are on the hook for these mortgages. And so we need to make sure that the people that are enjoying the benefits of the FHA, having an FHA loan in this country, are actually carrying their load. And that we're not actually putting them at risk, the taxpayers at risk. Because for those people that don't have an FHA mortgage or don't have a mortgage, that have a private mortgage, then they are in fact, being penalized because they're paying their mortgage and they're paying the premium, risk premium for having a privately insured mortgage. But at the same token, they're at risk of actually also subsidizing the premium for people that have an FHA loan. So there's a number of areas where we're going to explore today, but I wanted to make sure that we have an open and honest discussion about that. And one of the things that we want to make sure is that as we move forward, that we make sure that FHA is operating within what I think is the congressional intent. It's gotten to be a much bigger organization, and it's actually growing at an exponential rate. It's growing faster than it's ever grown, and it's bigger than it's ever been. And the question is this the FHA that this Congress intended, and is this FHA being run in an appropriate way for the American taxpayers? And so I look forward to the hearing. I look forward to the witnesses today. And with that, I'll yield back my time.